Since the 1980s, home values in Canada have been rising exceedingly fast, and in fact, much faster than the average Canadian household. There's some graphs out there that can show the actual split or gap between housing prices and Canadian average housings since the 1980s, and the gap is enormous. With this in mind, we know that the housing market is cyclical, and housing prices don't always increase. There are some times when prices will correct or drop, but in general, the housing market has been increasing as population, demand, and supply cannot catch up. Now, with this growing gap in housing prices relative to average household income, it's becoming increasingly hard for young Canadians and newcomers to Canada to be able to actually even enter the housing market. Savvy investors know that the sooner that they can get into a property, the sooner they can get onto that train, and they can ride that appreciation of property while looking at refinancing or paying down their mortgages aggressively while they're in that property. So yes, there are benefits to waiting until you can put 20% down, namely you don't have to take mortgage loan insurance, but what are the opportunity costs of not purchasing a property and waiting until you have that 20% down? It could be a much higher price in the future. It could be not even being able to get into the housing market. For more information, tips on everything mortgages, remember to like, share, and follow.